Hey guys, Tesla stock is up 400% for the year, and battery day is just right around the corner. So I think a lot of investors are nervous and thinking about selling their shares. In this video, I'm going to play an interview of the former CEO of Ford justifying Tesla's stock price. Now, this interview took place a couple months ago in July when the stock price was $1,200 pre-split. So post-split, that's around $240. However, I still think this is relevant today with what he says in this interview. So let's take a look at what he has to say.
So I want to get your take on the fact that we do see Tesla at all-time highs. It's a market cap that has surpassed all of the other auto manufacturers now. Is this really about delivery expectations, which are in the tens of the thousands versus millions at other auto manufacturers? Or is this more about where the future is headed for mobility when you talk about things like EVs and self-driving technology is something that Tesla right now currently has such a head start on?
Yes, I think it's actually a combination of both, Morgan. I think the first, what the Tesla's being rewarded with is growth. I mean, they grew on a month-over-month basis. And although on a year-over-year basis, they were down about 5%, the rest of the auto industry was down here in the States almost about 25 to 30%. I also think there's a couple other things that investors are looking at. They're looking at competition, and there was an anticipation that the established OEMs would bring products to market, which they are. But you look at somebody like VW, who's having a lot of problems with their ID.3 in terms of the software management, and that's something that Tesla has done very well. They haven't mastered the manufacturing piece of it, but they have mastered the software piece of it, which the established OEMs still need to do. I think also from a CO2 reduction standpoint, even in this depressed economic environment, you're seeing places like China and Europe not backing off CO2 reduction targets, which are important for electrification. And I think finally, investors are saying, listen, there are new products coming forward, whether it's the Cybertruck or the heavy-duty truck. Those are all incremental products. They're not replacing other products in their lineup. And then to your second point, it is around electrification going forward. It is going to be a natural demand, but also enhanced by either government incentives or CO2 reduction. So I think it's a combination of both those. And I think the stock is heading higher. I think Elon was very, very focused on profitability in the second quarter. Earlier in the quarter, he announced cutting of salaries, rent reductions he was asking from landlords. Those type of things, and he was doing that so that if he could be profitable this quarter, that would be 4 profitable quarters in a row. And with that accumulated profit, you can be eligible to be included in the S&P 500. And if that's the case, not only will Tesla get the prestige of that, but also I think a lot of index funds will be driven to include Tesla in their portfolio, which will increase the demand for the stock potentially going up further.
Yeah, I mean, that's such a key point you make, and it's pretty incredible to hear you say that you do think the stock is going higher. It's trading at more than $1,200 a share right now, and so I guess it is, to a certain extent, a profitability story. And one of the things that I've heard recently is that because of cost cuts, because of COVID and what that's done to auto demand more broadly right now, is that you could potentially see some of the other auto manufacturers pulling back on investments around next-gen mobility and next-gen technologies. Is that something that is actually taking root, or are those priorities?
Well, I think for all the established OEMs, electrification is still a big priority. And I don't think they're going to back off on that.
Okay.
Because they need it not only for a regulatory standpoint, but they need it from a competitive standpoint. I think in things like autonomous vehicles, you're going to see more partnerships, as you've seen with Ford and VW, GM and Honda, where they're pooling their resources. Because in the case of EVs or electrified vehicles, the technology is ready. There's a business model around it. For autonomous vehicles, the technology is not ready yet, and there's not a real business model yet. So I think they'll pool their resources going forward and push that out.
What's your take, Mark, on some of his tweets, though? I mean, clearly his tweets have much reined in from where they were once. But again today, saying who wears short shorts, saying we'll send some to the short seller enrichment commission. As a former CEO yourself, would you have ever put out tweets like that?
Well, I personally wouldn't put out a tweet like that. I subscribe to the theory that be careful of who you step on the way up, because eventually you might be on your way down. But listen, Elon is Elon. I can't crawl inside of his head. But I think, he does what he does, and it's a reflection of his personality. It's a reflection of the brand of Tesla.
So that interview should be really reassuring for investors. It's a good sign when other people in the same industry think your stock will continue to rise. Also, a message to the investors who are thinking about selling their shares of Tesla before Battery Day and then to buy in at a potential better price. Just remember, not only do you need to sell at the right price, but then you need to buy back in at the right price as well. It's easy to get greedy and just not buy back in until you think is the right price, but then all of a sudden Tesla announces some big news and the stock shoots up 50%, and now you're not invested in Tesla and you got to buy back in at a higher price than you sold it in the first place. So timing the market is nearly impossible to do on a consistent basis. If you believe in Tesla as a long-term company, it's easier just to stay invested and then buy additional shares on the dip. So I currently have about $10,000 invested in Tesla, and I'm not going to sell any of those shares. However, it is nice to take advantage of dips. So I also have an additional pool of shares where I buy and trade Tesla stock, since it is very volatile, and if you play it right, you can make money. But for myself, I always want to make sure I have a portion of those shares always invested for the long-term Tesla. And then the shares I use to trade is just kind of play money. So that's my strategy with Tesla. I'm going to go more in depth in that in future videos where I'll break it down in more detail. And yeah, comment down below, guys, what your strategy is with Tesla stock. I know a lot of people are probably thinking about buying or selling before Battery Day, and if so, tell me what your plan is. Maybe you have a different view on it than I do, and as a community on this channel, we can talk about it and discuss it together to make some money. So that's all I have for this video, guys. I'll see you in the next one.